All right, good morning, everyone. This is Shane with Trade ATS. Before we go ahead and jump into it, I just want to do a quick little sound check. If you can hear me all right, go ahead and type a Y into the chat button. All right, beautiful. Looks like we're up and running. So we're going to do things a little bit differently today. Wade's actually under the weather, so I'm going to be kind of handling the webinar. For those of you that don't know me, my name is Shane Guth. I'm actually Wade's brother. We kind of are the main people that manage all of Trade ATS and everything. And if any of you have ever sent an email in to support, there's a good chance that we've already spoken before. So what I was planning on doing today is obviously going over the volatility report, but then I also wanted to go through and show how we actually make the volatility report. So that includes, it's going to be more of an exercise of scanning pairs and how we kind of make the decision on what we're going to use and why we're doing that and all that stuff. So kind of in expectation that it'll help you guys see something a little bit earlier than you might otherwise if you're just looking for movement that's already happened. So anyways, let me go ahead and jump into it. Hold on one second. All right, so what we've got here is this week's volatility report. Our first pair that we chose was pound dollar. Let me go ahead and jump over into the chart and we can just kind of talk about what's going on with this. This one was actually pretty interesting. If you see here, we're talking about it being long, but contingent on staying above weekly threshold price. This one actually ended up taking out or heading short quite a bit. It just completely dropped down below the threshold price. So now we're in a totally short market. But for those of you that are, on the software and everything, we would see that as prices settled underneath the weekly threshold price. And now we're definitely looking to keep this one short and, get all the way back to somewhere into that lower expansion price on the weekly, if not, maybe a target a little bit before then. Let's go ahead and pull up the daily. Yeah, so we rotated off of this daily expansion price. So it doesn't look quite as good on the daily. We're still up above the most recent one. So if you wanted to give it a little bit of room and just see how the reaction was when it got to that level. So for those of you that are a little bit newer or a little bit newer, does anybody have any questions about what the expansion lines are or kind of what they represent? Because I know these things can be a little bit confusing sometimes. I'll kind of let that cook there in the chat for a little bit, but I'll keep on going through this. So anyways, the way that we, getting back to the volatility report, that report's really meant to show that we're going to be running into volume in a market. If we see signs of something happening, we'll do some commentary about what direction it seems to be going at the moment that we do it. But it's really meant to show that there's going to be some volume and some good movement coming into that market, and that you'll be a little bit earlier to the party if you choose to trade that throughout the week. Anyways, here let's take a look at a little bit smaller time frame on this real quick. Yeah, so in the volatility report, we were talking about how it was running into some resistance, or that it wasn't, not necessarily resistance, but that it was headed up towards a liquidity line and we weren't able to get through that. So that's always an indication that the market is going to be running in one direction when it gets real close to a liquidity line and then backs off of it going the other direction. If you look at most trending markets, you'll notice it's got a bias towards taking out one side. So in the example of a long market, it'll just keep on pushing through green or excuse me, red liquidity lines over and over, generating green ones, not really taking them out. Maybe every now and then it'll take out a green liquidity line, but it's just overall got a bias towards red liquidity, you know, in a long market. So kind of same thing is setting up here on to the short side. So we stopped taking out the red liquidity in the long move, and now we've clearly got a bias towards, you know, heading towards new green liquidity. So we want to stay, you know, to the short side now that we've seen that reaction to the expansion line. All right, so we got a good question from Isaiah. How far back do past expansion lines affect price? So that's a really good question, and here's why. Expansion lines, what they represent are the orders that are happening inside of any given contraction. So if somebody were, let me see, if somebody were to get into a trade inside of this contraction, you know, kind of the retail public, they wouldn't enter an order. We don't exactly know what side of the market they're taking in the contraction. We just know that there's lots of orders taking place in there because now there's time for you know, the market to breathe and for people to kind of decide what they want to do. As soon as it breaks out, now that tells us that there was a bias to the sell side of the market inside of that contraction. And the expansion line represents the average price that somebody would have gotten into this contraction. So this is, yeah, if whether anywhere that they got in, you know, they're all over the place, but they're, you know, the average price that they would have done it just by logistics, that the market never really got too far away from there. This is the average price that they would have entered into that order. That's why there's such reactive points, because that represents, you know, just the general area that somebody got in, and also why sometimes you'll see price whip past it, because again, it's a general line representing all of the orders that are in that contraction. So his question was, how far back do past expansion lines affect price? So I'll show you one that is still in play and one that's probably not in play. Actually, you know, we only have to go back two. So this one is still in play. The reason it would still be in play, in my opinion, is that we broke out, and anybody that was in this trade to the long side, you know, maybe maybe a few got knocked out right there just because they might have, you know, been through negative, just managing the risk real low. But there's probably still quite a few people that are in this to the long side, just by virtue that it never really went too far past it. Now, on the other hand, one that might not still be in play is this guy right here. So, you know, if we go back to on the 4-hour chart on pound dollar, so this one was in play. We broke out of the box, came up, tested the expansion line, and then we broke short. So at that point, all the people that were in this expansion to the short side, you know, we're doing pretty good with this trade. But then of course we went through, had another reaction to another expansion line and then whipped up. So at this point, anybody that entered into this trade has now gone all the way down and then all the way up through this, you know, big push up to the long side. Very unlikely that, you know, anybody that was in that market is still going to be, you know, what wasn't taken out or didn't cover, or you know, whatever happened. So now that we have movement, you know, whipping all around. Isaiah, just to check, does that answer your question on how far back past expansion lines are, you know, affect current price? All right, and we got another question from Thomas. Why are expansion lines different lengths? So expansion lines go until there's a new expansion line. So you'll see they all end on right on the dot of a new one. And it doesn't, I wouldn't say that an expansion line would use, you know, a longer expansion line really means much more than a shorter expansion line, other than it just has not made a new expansion line for a little bit. And that can mean a lot of different things. You know, if it hasn't made an expansion line for a long time, does that mean that, you know, the market might be trending, or does it mean that it just keeps on, yeah, typically it means that it could be trending, because if you're not in contraction and you're not in expansion, then you're trending. So if it doesn't make an expansion line for a long time, it just hasn't hit that phase of the market yet for a little bit, or it's still inside of that current contraction. All right, so I think we're good on pound. Well, before I wrap up pound dollar, is anybody in this or trading it? Go ahead and put in a chat, and I'm going to move on to the next one, but we'll try and revisit it here in a little bit. Okay, our next pair was the franc versus the yen. And we did not have a directional bias on it because there wasn't really a whole lot out of this. It was a little bit unclear. We'll go over that though. A quick little thing for you guys. You can actually have it where you can show more pairs under certain brokers just by right clicking around your market watch and then selecting show all. So just little thing, if for any of you guys that might only have a handful of pairs. Okay, so Chief Yen, let me go to a little bit higher time frame. So weekly and the daily. All right, and this is what we were talking about with this one not really having too much of a directional bias. It's clear that it's going to start moving just by the fact that it broke out of contraction. Now it's in the expansion phase. Let me go through. So I'm actually the one that puts together most of the volatility report. So let me go through a little bit of my thought process on Chief Yen, why this would not get a directional bias. So I'll go through some of the things that were in the favor of this. First, I'll go through what was in its favor to the short side. So on the short side, we just came out of this whole range through here, lots of expansion lines. It's clear that this was not a great area to be in a trade. Pushed up, and we can see that we had a little bit of a reaction to this past expansion line over here from December. So we rotated right off of that past expansion line, went into a box, and now we're whipping down to the short side. So that would be a very good indication of a short trade overall. But by the time we got over here, we can see on our little bit smaller time frame, the daily, there was two things preventing me from putting that we had a short bias on this pair. The first one being that we came right down to this daily expansion line and basically bounced off of it. That's usually not the best thing that you want to see if you're looking for a long-term short trade. If it really was short, it should hit that, maybe push a little bit through it. You'll get a little bit of a breath, and then it'll just continue taking out liquidity. So we also went and rotated off of this liquidity line right here. We can see push down, so simultaneously took that out and took out liquidity, rotated, and now we're headed back up. So for that reason, I kind of chose not to include a directional bias, just because it's a little bit unclear. Again, it's clear that it's about to move, but the actual direction isn't. We just need to let a little bit more time go by. I'm getting some reports in the chat that people can't hear me. Could I do a little sound check here, and just, if you can hear me all right, go ahead and type a Y. All right, perfect. All right. So are there any, is anybody trading the franc versus the yen right now? Always interested in what you guys are doing. Actually, let's take a little poll right now. Um, I want everyone in the chat, even you folks that don't type in quite as much. Go ahead and type in what pair you're trading. And I don't mean like all, five of them that you're watching, but the one that which one did you trade this morning if you got up to trade? We'll go back through and kind of look at this poll, and then that always helps us, focus some of our content on pairs that are really being traded actively. All right, so I'm going to go ahead and move over to the next pair. So we've got pound versus the CAD, and our directional bias on this was long, although it was not a very strong long recommendation. Kind of my little disclaimer here at the bottom: keep to the long side, but tread lightly and manage your risk as tightly as possible. All right, so let's go ahead and pull that guy up. Okay, so pound versus the CAD. So let's go ahead and just talk a little bit about what I saw, or why we decided to include this, and why we chose the long directional bias. Because this one is actually set up very similarly to pound dollar, in that it just broke out of it actually looks very, very similar to it. Yeah, pound dollar just broke out. It's coming up. It's if you look on a little bit smaller time frames, it's pushed quite a bit recently, but uh, pound CAD was a little bit better in that it just broke out of the box. It did take out some liquidity, but we can see that we've got some more profit targets up above us. But either way, the one thing that really worried me about pound CAD in general is that there's not really a whole lot above this range. So sometimes, we can see some stop taking behavior where it'll just go and break through the high, and then whip back the other direction. So, you always want to be careful of stuff like that. But for the moment, it seems that it's a little bit better. It looks like it might be going into contraction on smaller time frames right here, which kind of tells me that, any of these orders, it whips up, takes out some liquidity, and then goes into contraction. There's still a good chance that it could just continue. It could just take all those orders, use those as liquidity to fuel more of the move to the upside. Wow, lots of feedback coming through in the comments on what pairs you guys are trading. Thank you for putting all that in. Let's go to a little bit smaller time frame on this and take a look at what's going on this morning. Oh yeah, there's our contraction box. That wasn't there a little while ago. Okay, so kind of number one rule of contraction is if you're one of our traders doing the 4-hour and the 15-minute, which I know there's a lot of you, you just don't want to enter a trade on the 4-hour. You know that you're going to get more information when it breaks through the high or low of it. So it's why accept any entry less than perfection? So anywho, let's go ahead and wait for it to break out of the low. Well, it looks like it's headed towards the low of this box right now. Then we know we're going to get an expansion line about, right in this area. We want to see kind of how it reacts to some of the liquidity lines down there. And just remember, if this thing is going to continue up to the long side, it'll give you a nice, easy entry. It'll break down to the short side. It'll start creeping back up. It'll get above the expansion line on the 4-hour. And then it'll give you some nice pullbacks on the 15-minute to jump right in. So, just give this one a little bit more time if you're trading the 4-hour into the 15-minute. All right, so I also wanted to cover last week's volatility report. I'm sure you can see for this one, we actually just left last week's on. And we can, really focus on why it's important to find a market that's, going to be good to trade, or why it's important to rather find a market that's getting ready to have some movement, and focusing more on that instead of looking for something that's already moved. So our first one is euro versus the yen. So euro versus the yen are, we didn't have a directional bias at the time that we released this, but let me pull up the daily and weekly. Okay, but it definitely broke to the short side. So when the volatility report was released, it was somewhere up in this area, and we can show it for reference. Yeah, so we were whipping up, and this is actually very similar to what's going on pound dollar right now. In that, when we took released the volatility report, it was above expansion on the daily, but a little while after it kind of pushed down, and we can see a clear rotation. So again, very similar to pound dollar right now. And then we went and pushed down 401 pips once we got under the threshold price. So let's look at some of the trading that actually happened in there. And you can manage your risk off that, but there's always some good moves once you get in there. Let's see. So that would be from March 3rd. Okay, so kind of in this area, if you're looking at the 4-hour into the 15-minute into the 4-hour, we had a box right here, but then we broke out. We see that price settled underneath this expansion line, and then from this point, volatility, we're under the daily expansion line. We're under the 4-hour. Lots of stuff is pointing towards the to the short side. So all through here would have been our potential entries. You could have, gotten started trading through all of this. Through here, this was definitely a little bit whippy, but we see that it was just, kind of in preparation for it to break to the short side. So I get a lot of emails into the support. Support, kind of our number one thing is just, people are looking for a little bit of help on entry. So the first thing that you always want to focus on is finding a market where you don't have to think about the other side. So in this case, we would have only been looking to a short trade because on our higher time frame, we're under expansion. We're still pretty early to the party. At this point, it hadn't really had a big move yet. And under expansion, our larger time frames are also saying, once it rotated off that daily, we're also, that was in compliance that we were going to be headed short. So then we start looking to our entry time frame to start testing a few trades. Now, what I see when people are taking a negative trade is they're two things. One, they're not waiting for their entry time frame to get above expansion. So we want to be below expansion on our your directional bias time frame, and then you want to be above expansion on your larger time frame. So what that would look like, all below expansion here. And then on your smaller time frame, you're waiting for price to get whatever the most recent expansion line is, you're waiting for price to get down below that or to get up above that so that you can rip it back the opposite direction. So let's just assume that we just started trading and taking every single opportunity through here and how we would manage risk on all of these, because sometimes it's not always quite so clear, in the moment what's going to happen. So you might have a few losers in there. Hopefully over time you can kind of look at the behavior and see, when things might not be setting up ideal. A good example of that would be right here, where we have four candles all with their own expansion line, or 4 expansion lines right in a row. That's a little weird. You probably want to leave that alone because it's just whipping around quite a bit. So you might want to leave that alone, but for the sake of this, kind of showing you guys what you want to do and how to manage risk, we'll just assume that you did take a trade in here. So one of the first times that this broke high above this was right here. This would have been an expansion line back here, and we whipped up above it. And you could have entered, let's say that you got in and it started pulling back on you. You could have entered and managed your risk right off of this liquidity line. Just because it has shown that it's not going through it, it pulls back a little bit, and say you enter right in here, and you would want to manage your risk right off that liquidity line and then get out once it goes through. So that would have probably been a negative. And then you could have done, if you did take that and you wanted to re-rip it, you could have managed your risk off that. Once you saw that it wasn't going to go through, then it pushed, maybe get out because there's a box that formed, we're still above it. You can still manage your risk off of that liquidity line. And if you got okay entry into that, then you could have wrote it down. So again, just to kind of preface myself, I'm not saying that you would want to take every one of these trades, but kind of you flip the coin and you don't really know what to expect in the moment. And this is just how you would manage literally every single one of these opportunities through here. So this one ended up taking off a little bit, or actually this one did. You never would have gotten knocked out if you managed your risk off of that liquidity line. Went into a box, you would have already been in profit, so you could have made the call if you wanted to ride it, and it did end up taking off to the short side. So that's one other question I get quite a bit, is how do I manage profit? Or, how do I exactly know where to get out? You always want to think of, our main purpose is to look for a trending market. So if you're in a trending market, you got to remember that you're going to have a bias towards taking out one side of liquidity. So in this case, you'd be looking for it to keep stacking down and taking out liquidity lines. The moment that it took out this red liquidity line right here, it could have been an entry. If you weren't in a trade right here, you could have either taken your trade out, or if you weren't in one, you might have taken one once it whipped through and then came back down and then managed your risk off that same level. But that would be a good indication that it's about to turn, because again, trending markets, let me go to a trending market. Trending markets, like right here, they have a bias towards one side of liquidity. So if it pushes down and then takes out the other side of liquidity, that could be an indication that you're not trending. And markets that aren't trending reverse and go the other direction. So kind of back over to where we were. So anyways, we just had a lot of whippiness through here. One other entry that I see, so we came, whipped up, and this could have been another potential entry. We saw it push through this liquidity line, came right up near this one. If you got in somewhere in this area, then you would have managed your risk off of that liquidity line, and then whipped up and ended up taking that one out, and then came back down. If you could have also managed your risk once it pushed up through that. Hi Isaiah, I see your comment. It says say that again. Which part exactly was I talking about? Want to make sure that if I am going through any of this stuff and you guys aren't understand what I'm saying, because I know I can talk a little fast and I'm literally just talking into a mic right now. Give me a little feedback, give me a little love, so I can make sure that you know what I'm talking about. Yeah, and sorry if I'm being a little too, I'm trying to painfully go through some of the details, because again, I get the support emails and I see what the issues are, and it's just how do I manage, that's the question with everybody. It's how do I manage risk, and how do I know, that a trade is going? So I'm just trying to talk about some of the behaviors that happen inside of the different phases, and then, what could be turned into a good entry. All right, so let me go through just real quick before we wrap this one up. Let me just go through what was the best entry and why. The best entries in here were when it took out liquidity line of the opposite direction, up above expansion, and then started rotating back down in. In this situation, you'd want to get in once you saw it took out liquidity, came back down, and then you would want to manage your risk off of roughly that level, maybe setting your stop a little bit above it. So in this, this situation, took out liquidity, rotated back down, you get in somewhere in here once you see a turn, and then set your stop a little bit above it, and kind of let the market play out and do what it's going to do. It happened a few times in here, so that would be my ideal entry. Okay, so got a question. What would you do now on Euro Yen? So right now on Euro Yen, we came down and we took out this liquidity right here, and now we're obviously going back the other direction. If the market ever moves and it goes and takes out a big chunk of liquidity, you have to ask yourself why it ever moved to that direction in the first place. So a few examples of that back here are, okay, we had this big short move and it took out this liquidity and then moved the other direction. So that answers why the move happened in the first place. On this trade here, took out this chunk of liquidity, and now it's going the opposite direction. The only reason it pushed down was to take out that liquidity. I see a lot of people jumping in right around this level. Whenever it takes out liquidity and then starts backing off, there's a good chance that it's probably going to turn the other direction. The only problem with this, there can be a lot of good trades going the opposite direction. But just one of the problems with it is that you have less lines to manage your risk off of on the ride back up, because typically, in something real big like this, there's not a whole lot of architecture to manage your risk off of. So right now in Euro Yen, honestly, I would probably just be holding out until we get back to this, because this seems like a big expansion move at the moment. It doesn't really seem like it's a true trending move, because it's not continuing to stack down towards more liquidity lines. So if this is a big expansion move, then we're still in the expansion phase, and you probably want to, you already missed the trade at this point. So Euro Yen might just be over for the moment. All right, give me one moment just to go through the comments. We had quite a few coming through. Give me 1 second. All right. So it looks like a few folks are in the Chief Yen. I'm assuming because it was on the volatility report, and we're starting to get a little bit of volume in it. So let's go ahead and just talk about what's going on in this pair right now on a 4-hour and a 15-minute chart, and just see if there's anything that we can do with this movement. So we can see the market whipped down. We took out this liquidity line and pushed a little bit past it, and we had one of the telltale signs of a possible reversal, that going right up to a liquidity line and then backing off and turning the other direction. Now in the moment, when I was talking about the some of the entries on the smaller time frame, that stuff happens on every single time frame. So sometimes you can get a really good entry on your 15-minute when you see it pushes right up to a liquidity line and then backs off, and you have like super tight risk, like we had that situation right here as well. Anyway, so for right now, what would we do on Chief Yen? Well, we had this reaction. The most recent thing that happened is we had another reaction to the 4-hour average price. Now, it's pretty typical for it to hit an average price when it pushes through to go through a breath. So you can count on that pretty much all the time for some sort of breath or reversal, but you're always going to get a reaction to that 4-hour average price line just because of the amount of orders that it represents. You know, this one, even though it's not connected to a box, it still represents that a lot of people are placing orders at this level. So when it pushes up through, a lot of those orders are being taken out of the market, or maybe people have, you know, uh, buy or sell orders, you know, that they're looking to enter in at that level. So it's just a very sensitive price level. When it pushes through it, you're going to expect a reaction. You'll see it all over the place, and you can count on that happening. So when we see this breath coming through, we don't want to jump in too fast because we know that there's going to be some sort of reaction from that average price line. So now that we're going through that reaction, forming a box right here, I wouldn't say that our directional bias is long at the moment, and we really want to wait for it to get back up above this and see if we start stacking through some of these liquidity lines. Hold on one second, got some comments coming through. All right, so yeah, at the moment there's not really any trade um, on Chief Yen. We're just waiting for some of our lower time frames to line up and get above some expansion lines, get above or all of them to stay below. So we have a lot of people that entered in what pair they're actually trading. Is anybody looking, you know, kind of looking at another market to, is anybody riding a trade currently, or, you know, is there any market that somebody would want us to take a look at and kind of go through that is not, that we haven't already talked about on the volatility report? Give me one second to catch up on some of these. All right, so we got one question. What are some of the less used signals from the assistant? Box confirmed, box expansion, dot expansion, buy sell liquidity. I use them only on higher time frames. Am I missing something? No, they're less used just because one line, you know, versus the grade A or grade B signals take a lot of different things into account. You know, what the overall trend is, where it is versus some of the expansion lines. Is it out of a box? Is it taking out a liquidity line? It uses a lot of those things all together. Whereas just any of those individual things, that's kind of a personal preference. You know, if you're looking to take a look at a specific market, once a liquidity line's taken out, then, you know, you can set that up and it'll let you know that, you know, it's taking out liquidity just so you can go take a look at it if that's what you're looking to do on your particular setup or the pair that you're looking at. They're not any better or worse, but, you know, it's just a personal preference of what you want to see with it. All right, give me one second to get through the comments. All right, got a request to take a look at oil. Yeah, wow, I'm looking forward to those gas prices. Um, all right, so kind of same thing as always. Was there any signs on the, as far as the three stages as to what was coming up? So we formed a box right here, came up. It's a little bit hard to expand up to that. Yeah, we rotated right off of this expansion line to the short side, settled underneath it, formed a new box, came up, didn't really test it, but we were fairly close, and then started pushing down to the short side. Let's see. This is one of those things where it just opened and kind of took off. I don't know that there was really that great of entries into this. Yeah, this looks like it would have been an entry right here. We had a clear trend to the short side at this point, stacking candles, and then pushed up above an expansion line, rotated off of it, and then you could have managed your risk off of either this liquidity line, or if you got in a little bit late, if it pushed up much past the high, since we had a reaction to this expansion line. Other than that, that's pretty much the only low risk entry that I see. You can always get in when you see the turn on something like this, but if you take a negative on it, you don't quite know why. Yeah, now moving forward in gold, I mean, we're technically above the expansion line, which would say that we're in a long market, but that's only on our 4 hour. Let's go ahead and take a look at the daily. Interesting. I wonder why it stopped right there. So that's definitely interesting. I'm not saying to go long, but it wouldn't be a big surprise if it did end up rotating off of that. Just there's not really much more liquidity down below. Here's a good question from Andre. Do I understand correctly if a lot of liquidity lines means a lot of gas to support the trend? Yeah, that's exactly right. So that's one common misconception, that the market can't trend without liquidity lines there. I wouldn't necessarily say that. It can still push in a direction even if it's not headed towards a big cluster of liquidity lines, but it tends to head towards clusters of liquidity lines. You'll get these big moves when the conditions are set up really well and you've got liquidity that you can just keep taking out. Yeah, so it looks like this push, our first liquidity line that we took out on the daily chart was on January 24th, and since then, we have not taken out any liquidity of the opposite color, and it's just been headed down, stacking through. So that's trending market behavior right there. You'll find it in basically every pair where it plays out very similarly to this when it's in a trending move. So if somebody were to ask me, how do I catch this? Is it going to reverse after this? I would probably say that you know, it looks like the move already happened to the short side. You don't want to decide to start trading oil right here. I mean, it may reverse and it'll have different signs that it's going to do stuff if you give it a little bit of time. But after you see something like this, the real trade was down here, and if you didn't know to look at it, or you weren't, you kind of missed it at this point. All right, give me 1 second, let me catch up on some comments here. Yeah, so Michael makes a good point. Sometimes there aren't any liquidity lines. uh there aren't any liquidity lines to manage manage your profit targets off of. It especially happens on some of the lower time frames as well, just because the data doesn't go back that far. But something that you can do to remedy that, and I wouldn't recommend leaving it like this because it kind of makes it a bit sluggish. But you can pull up your indicators. And you can change max history bars to a higher number. So max history bars means how many HA candles it'll load back. So right now it's at 2,000, but you can make that a little bit more. If you know that price has been up in this level and you're not getting some of the liquidity lines that you need. If you have to load like 10,000 though, maybe maybe lay off from trading that pair. Or doing something like that. Just look for something that's a little bit clearer and a little bit more recent. But yeah, anyways, if you're just out of range of some drop and you want to raise it to 3,000 or something, then it'll go back an extra 1,000 candles and give you a few more liquidity lines if you're missing them. And again, that's particularly on the small time frames where like the 5-minute chart where it just doesn't go back more than a few days or whatever it ends up being. All right, give me 1 second to get through some of these comments. All right, so question from Nikki, did you take any trade lately? Honestly, no. Mondays, since I put together the volatility report, Mondays are typically a day off for trading. That's a good way to go into a spin cycle trying to trade while you're trying to put that whole report together and build all the images and type all of it out and everything. But I'd probably keep my eye, I'm looking at all the pairs that were on it, probably franc versus the yen right now. I think that's going to be a pretty good opportunity later on in this week. Maybe not right now at the moment, but one more thing, that volatility report, the first one that we had, that was right before markets really started getting moving, with all of the coronavirus panic and just all the reaction from some of that. These volatility reports have been really difficult to put together. Just to find the 3 pairs, I think it took about 2.5 hours of going through and really deep diving through all of them, all of the pairs, and looking at different time frames and measuring all the candles and all that stuff and really and being very very just really picky about what pair we're going to end up using. So anyways, I typically just stick to the pairs that are on that volatility report. Give me 1 second to look through some more of the comments. All right, question, would you trade through Hong Kong or would you trade Hong Kong dollar? We tend not to, when I go through some of these, I would kind of classify that a little bit more under exotic. I try to keep, my own trading and everything on the volatility report up above, in this general realm of some of the majors and the things that most people are going to be trading, and that you can always expect that they're going to have good volume. There's not going to be anything real weird on them most of the time. So we try and keep it, all of these pairs, everything beyond above gold right here is what we try and keep the focus on. All right, give me 1 more second. Andre asked, when will today's recording be available? We try to get the recording up within a few hours. It's a pretty, an hour-long file. It takes kind of a while to go and cut up and convert over to a file that we can upload to YouTube. So there was one final thing that I wanted to go through with you guys, and that's something that I think it'll be helpful moving forward, just how to come up with or how I put together the volatility report, because I'm, we're all looking at the same thing. So typically I will pull up, and I'm showing you this so you can hopefully do it on your own, and maybe even during the middle of the week, just kind of see how things are shaping up. So typically I'll put on a weekly chart and a daily, and then just start working through the list, and I'll kind of show you some of the things that we're looking at. So usually start at the top of the list. Obviously pound dollar ended up being one of them, but and I'm not going to bore you guys with going through that again. Kind of already explained why it's on there. So start going through the list, and one of the first things is, okay, how far out of the last box are we? On euro dollar, I mean, it's had some good movement. None of this is to say that any of these things aren't going to have good movement, but one of the first things is, how far out of the box are we? And has it already had a trade that we just absolutely missed? Reflected on the larger and smaller time frames. So this one, it's clear. It's like, if don't be jumping into this now if you haven't gotten any of it. It's like, where were you way back here? After we've had 5-6 days of it just stacking candles to the long side. So don't decide to jump into it at the tail end when it right before it starts going into contraction. So that's kind of a no-go right off the bat. Continuing through it. So that's another good one. We try not to include things that get too complicated. So we can see that this one pushed down, had a big gap. There's actually notes on two pairs that I was thinking about of including, but didn't quite make the cut, and I'll go through those. I think that'll be interesting for you guys. So one of them was New Zealand versus the dollar. Yeah, so this is one that didn't make the cut. I've got a little list next to me, and it's got a big X through it. Not to say that it's not something that you can trade, but anyways, so on New Zealand versus the dollar, we had a lot of weird movement earlier on in this week where, we had a lot of these real snappy, these moves that snapped all around, and a lot of markets had, kind of pushed into a trend and were way overextended. This one was interesting to me because we had that move, but it basically stayed inside of this little range. We didn't really go anywhere. So that to me kind of says, more or less stop taking behavior. And if there's going to be stop taking behavior, then typically you're going to get some sort of reaction off of that. We don't know exactly what it is until things start setting up, but kind of every reaction or every action, similar reaction. So yeah, this whipped all around. Let me go to a little bit smaller time frame so we can look at it. Oops. Okay, so yeah, we can see that just completely whipped down to the short side on this guy. Completely whipped down to the short side. It looks like it, cleaned out basically anybody that was on this, that might have been in this on a long trade, and then whipped back up, rotated right off of this expansion line, and now it's going down. Now, I don't really know what to make of exactly what's going to happen direction-wise with this, but if it's going to go through all the hassle of doing a move like that, then there's probably a pretty good chance that it's going to start moving here soon. So we have had a little bit of downward movement after it, kind of went through this whipsaw to the upside and rotated off this expansion line. So there are some clues there, but the reason that this was not included in the volatility report is because this starts getting too complicated. I see a lot of people send over something and it's like, how would you rip this to the short side? Am I looking at this right to be able to rip the reversal? And there's just so many other pairs that have easy entries that, unless you get in super low risk on something like this, where you're testing to make sure that it's not gonna, that it's gonna reverse off of a little reaction like this, um, it just ends up being really, really difficult to trade that when there's so many easy entries where, you have a clear direction and you can just wait for it to whip above, you have a few pip risk on it and you can just ride it the direction that it's overall going in trend. So that would be something that didn't quite make the cut, but was interesting. All right, give me 1 second to get through some of these comments. I got a question from Benjamin. How would you trade CFDs and metals in USA platform? It just depends on the broker that you're going through. So if you don't have the market that you want available to you on MetaTrader 4, you just have to open up another account, or open up a demo account or real account with another broker. FX Choice is a pretty popular one with a lot of the subscribers and what I've got up here, just because they give you a little bit more flexibility on some of the markets than maybe like forex.com would. Question from Alex: do you think in the current state of panic the markets are tradable? Yeah, they're tradable. It's a lot, kind of going back to when we were making the volatility report, things are moving so much right now that it's a little bit hard to get to find a pair that's tradable, and at the beginning, I should say, at the beginning of being tradable. But everything is moving so much right now that it just makes the volatility report difficult to do, because the point of it is to show you something that's just starting to move, not something that's already moving. So there's a lot of good stuff, and remember that ATS is based off of whatever the sentiment of the retail public is. So don't feel like you have to get too wrapped up into what the actual news means on all this stuff, because it'll play out right here. If most people are ripping a trade short into whatever's going on, then you'll see that liquidity line show up that's going to get taken out in one way or another later on. So yeah, getting too wrapped up in some of the actual ins and outs of the news when you're just when you're ripping a 5-minute chart into a 4-hour, knowing exactly what something's going to do for a company's GDP or anything like that, it doesn't help you get a low risk entry into a 5-minute, into the hour or 4-hour chart. So, and again, you're going to get all the information that you need just from some of the, liquidity lines or expansion lines, or just where people are, where the general population is placing their trades. Question from Alex: how many good setups do you reckon one can get in a day or week? It mostly depends on what time frame you're trading in. You'll get bigger opportunities, obviously, on some of the bigger time frames, just because you're not going to get real caught up in some of the the noise of what's going on, and it just gives you a little bit longer term view. And you might get one of those if you were trading one of the pairs on the volatility report, maybe you'll get 1 or 2 instances where you can jump into a trade on these throughout the whole week. If you're trading one of the smaller time frames, like a 5-minute into an hour, then you're probably going to get 2 or 3 entry opportunities, solid entry opportunities, if you're looking at one pair that's moving in the morning. So, let's just say this is an average run-of-the-mill run down right here. We had one little snap up right here above this liquidity line that took out, or one snap up above this expansion line that took out liquidity and then rotated back down under it. So that was a low risk entry, and it was the only one that we got in this whole thing. But it's happened in the last few hours. So, hopefully that kind of gives you an indication. Yeah, it just depends what time frame you're looking at and if the pair you're looking at is moving or not. All right, 1 second, let me get through some of these comments. All right, just got one good question. Okay, big question. You just hit on how the red liquidity line is showing where the sentiment is. That on New Zealand USD on the 4 hour, you can see where people were selling. But aren't we talking about smart money selling from red liquidity? It is a big mistake for me to use red liquidity as a sell entry point pending if my supporting time frame is short. Yeah, that's a question that I get a lot where, people want to enter a trade when they see a sell liquidity line show up. And it's very tempting to, but you have to look at in relationship to where things are, where the best entry is, where you actually pop a sell liquidity line. So an example of that would be we didn't get this sell liquidity line up until this candle was, already, I don't know the exact position that it was in, but it was on this candle, which is not very good entry. You're way below expansion, and it's just too late to the party. The trade's already gone. If it whips up a little bit behind you, you're going to be so likely to close out that trade. So yeah, using these is not a good. They represent that people in this trade are still in it short. And the kind of talking, sorry. So thinking about how the software actually develops. I have to go a little bit deeper to explain how these liquidity lines work. People are entering in all directions, all over the market. So if we have a box, we don't know what the bias of the orders are in that box. When it breaks out, we know that the bias is short, and you tend to get a buy liquidity line once it breaks out to the short side. So the way that the algorithm for the liquidity lines works is it's it already knows that a liquidity line is going to be at that, at whatever level it ends up being, but it doesn't, the algorithm doesn't know whether to put it up above price or below. If this candle broke out to the long side, we would have gotten a liquidity line here, because it can't tell the future as to what's going to happen. Now, the reason that we do have a liquidity line there is because if you were in a buy trade right here, you're already out of the market, so there's no need to build a liquidity line there because you already got stopped out. So there's traders going each direction, and the reason it puts a liquidity line there is because the people that got in are out because it moved the other direction on them. So if you clicked into a short right there, there's a very good chance that you got out of the market because it went against you. So does that, I know it's a little bit on the complicated side. We try not to get into the weeds quite that much, but does that make sense as to why what's going on with some of these liquidity lines? Anyway, so that being said, you don't want to enter a trade when you get just on the sheer fact of seeing a liquidity line, because at that point it's already too late. And man, I lost my train of thought on that. Yeah, anyways, you just want to stay away. You really want to wait for the reaction to them, because then you're going to be able to manage your risk a lot better, and you know that something's actually happening. If liquidity gets taken out, you know that that's going to equal something, and we bias. We just handle our bias by keeping ourselves underneath whatever expansion line, whatever our most recent expansion line is, because the likelihood that the market's going to take off from that point is just a lot higher, especially if it's once we start stacking through one side of the market like we did here. Sorry if that got a little bit confusing. Let me catch up on a few more comments, and we're about an hour and 10 minutes in. I think we're going to go through just a few more comments. Let me catch up on a few real quick. 1 second. All right, so good question from Isaiah. When you're making the report, do you have a top 2 or 5 things that disqualifies pairs? Yeah, absolutely. I wouldn't even say that it's probably two things, and just kind of what I was going through before. Did it already move? You know, we're trying to, you know, for purposes of the volatility report, we're trying to get you into things that still have a chance of you being around for that big move taking place. So if the move has already happened, you know, it's you know, if you get onto this pair and then you enter it right here, you know, you're looking at it right when it's reaching some of these highs. It's not, oh wow, this thing's starting to move. It should be, wow, I just completely I missed that. You know, let's move on to the next thing. So that would probably be the biggest you know, no-go on why something would be included in the volatility report. And then the second one is you know, if it's kind of if it's unclear as to why it's doing what it's doing. You know, if we don't have if it doesn't seem like it would be easy for you guys to kind of get your minds around what, or for, and myself included, if it doesn't seem like it would be easy to you know, kind of figure out what's going on with the pair, you know, if we've got if it just broke out of a box, but it's whipping around in a range like this would probably not make it into the volatility report if something like this was going on some of the higher time frames, just because, you know, it's clear that this is a really messy market. But once things start opening up, then they have a much higher likelihood. So just kind of looking at the overall, you know, setup, ebb and flow of the market. All right, a few more comments. Okay, so here was a question. So using the 15-minute as an example, at the previous expansion line, or excuse me, previous red liquidity line, would you put an entry, assuming bias is still short, that would put entry on the 15-minute way above expansion, so a good entry in theory. So what I think you're asking, I'm sorry if you could elaborate a little bit more on that, but what I think you're asking is, would you manage, you know, just as soon as this broke out, it's not that far away from the liquidity line, that gives an indication, and it's still in trend with all of this stuff. It just kind of goes back to, you won't typically get a good entry opportunity if the market is already playing out or it's not really going to push anymore. So when you're looking at this right here, let's say that you didn't know that this hour just took out this liquidity line right here. So that's a really big indication that the market's going to turn around, because it just came down and gave it a little kiss, and now it's it's starting to float back the other direction on us. And you know, we're around this expansion line. There's a lot of stuff going on right here. When you see that, you typically don't really get that good of an entry when the market's not going to take off. So look at the best entry that happened in this happened to be one of the best entry in this. You know, it pushed down and it just started going. The way that whole setup is based on the 3 market phases and how things play out before the market starts going. It's not really like a big observation on our part on, you know, of the strategy. It's playing into the 3 market phases. It's that you know, we can kind of see that it's the whipsaw on a mini scale. That's why it's a good entry. And that means after the whipsaw, that means that it continues trending. So we had an expansion, it broke down to the short side, and then it whipped up, took out this expansion line, or excuse me, this liquidity line right here, and it started moving down. That was a mini 3 market phases right there. And that, if it goes through the, a contraction and expansion after that is trend. So at that point, if you see an entry like that, that usually means that it's going to move. So it's kind of a, don't put the horse before its carriage, I think. Would that be does that make sense to everyone? Kind of what I went through with that's a mini cycle playing out right there. And then we're relying on the larger time frame to pull us back in line with the overall direction. So we had a mini, the mini 3 phases play out right there. Contraction, expansion phase, and then it started going into trend, stacking through liquidity lines, and that was the best entry because it went through the whole 3 phases right there. So we didn't see another really good entry again all through here. All right, looks like it's making a little bit of sense. So kind of the long and short of it is, if you see a good low risk entry, that's usually an indication that the market is going to move, because kind of in line with the 3 market phases, the entries, you don't get an entry if the market's not going to move, because our entries in the basic trade taught in the course is based off of the 3 market phases and it playing out through that whipsaw on a smaller time frame to get you in line with trend on the larger time frames. That's why I'm sure a lot of you have noticed that a lot of times when it starts moving, you'll see it on the smaller time frame and you start feeling nervous when you get a reaction to an expansion level like this, and then it starts moving the other direction on you. And that's just all kind of learning the behavior as you spend more time with the software. So yeah, you'll see stuff on like that on lower time frames, and it's like, huh, that's not good when I was looking for it to go short. And that's because it's a mini 3 market phases playing out. Do one more question. I know some of you have got some lives that you got to get back to. Let me look through a few more here. Yeah, so all of this is not to say that every trade that you take has got to be this, because if you feel confident in the direction, you can certainly um, manage your trade off of some other lines through here. If you did get in once you saw a little bit of a rotation, it pushed up, you got in right around this red candle, you can still kind of manage your trade just above that high to see if it pushes too much further. The only problem that I see with some of that stuff is not when it's executed perfectly, it's when when you take a negative and you don't quite understand why you took it, it's not based off of it going through a line that you didn't expect it, or it's not based off that, then sometimes people can start to get susceptible to every time it pushes, just ripping it again, then getting knocked out, and then ripping it again, and then getting knocked out as it goes against you. So that's the only reason that I really try to focus on these entries that have a little bit more meat to why they're a good entry, versus just getting in the overall movement and the whatever direction it's going. Okay, I think and one more thing, just for those of you, there's a few comments about the expansion index, kind of the same thing. I always I really apologize. It's not quite ready. We're waiting to do a massive overhaul to the ATS suite in general to version 3.0. I can't give you a specific ETA because that really didn't work out well with the expansion index, but I can tell you that we are actively working on it. We've been making really big strides on the whole thing in general. And I think when you guys see it, we're adding in some nice quality of life things to the base indicator, the expansion index. We're just doing some updates across the whole board that I think you guys are going to be really pleased with when you see. So just bear with us a little bit longer. The expansion index is cool, but there's still enough to. Oh, whoops! Oh, accidentally clicked into a trade there, moving my mouse around. Demo account. Anyways, there's enough there to make your do whatever trades you got to take without it. But yeah, just give us a little bit more time, and I promise you're gonna like what we came up with.
Okay, Shane,
So
can I
anyways,
jump in here before you wrap things up?
oh yeah, so just to let you guys know, we're a family business. For those of you who don't know, this is actually me and Wade's dad. His name is Rob. You're gonna be hearing from him from time to time. I'll go ahead and let you take over, say what you want to say.
Yeah, I just wanted to wrap things up. And Shane, you did a great job. Wade's a little under the weather. But anyway, Shane jumped in there. And I just want to say for everybody that's online and trading, a couple things. One is don't underestimate learning how to use that volatility report and helping really focus on your storm watching so that you're not jumping all around on so many different pairs. And so what we're trying to do is give you something to look at and some opportunity that would happen in the near future. So as the volatility reports come out, make it a habit of getting a look at those, and we're going to try to review them and do a quick review of them on the webinars every week. The other thing I want to talk to you about and just mention is that we're in some very volatile times right now. So when we were teaching traders before, what I would always tell them is be prudent. It's not a video game. You don't always have to be in a trade because you're watching the screen, and you learn a lot by watching the screen and monitoring what's happening with price when you're not in a trade, because you're not emotionally, you're not invested in it. So there'll always be another trade. So I would just be prudent and steady as you go. And if you're in doubt because of multiple time frames aren't lining up for you, then when you're in doubt, stay out. That's what I would tell you. But there is opportunity, but just want to monitor those trades a lot closer than you might in the past, and make sure that if it's not behaving the way you want, don't fall in love with the idea that you got to win. Take a loss and get out. So that's all I got to say, Shane. So I'll let you wrap it up.
All right, thank you, Dad. Anyways, yeah. So with that being said, we're gonna go ahead and wrap it up. And Wade will be back on next week. I know he's a little bit smoother speaker than I am on some of these things, but anyways, thank you all for bearing with me. And yeah, we'll see you on next week. And one final, if I went over a concept or something that you want a little bit more information on, or just some clarity, as always, feel free to send an email to support@tradeats.com, and we all look at that and we'll get back to you. Anyways, that being said, thank you everyone, and have a great rest of your day.